The New Zealand dollar came under huge pressure yesterday, falling over 2 cents against the US dollar. The New Zealand dollar fell from over 86 cents against the US dollar at the start of the day to under 84 cents against the US dollar this morning. The New Zealand dollar is now down 4 cents against its peak against the US dollar of 88 cents. The decline in the New Zealand dollar was triggered by the announcement from the Bank of Japan it would intervene in the yen. The Bank of Japan actually had some success with this strategy, with the yen now down almost 2% against the US dollar. This added weakness to the New Zealand dollar. The dollar then extended its declines overnight due to weak offshore market sentiment. Equity markets overseas were completely smashed overnight. There was no new triggers for the decline other than continued ongoing concerns about the weakness in global growth, particularly in the US, and increased speculation that the Federal Reserve will do a third round of its quantitative easing program. Given this, the market focus now turns to payrolls over the weekend. The Bank of Japan intervention also follows moves by the Swiss National Bank to reduce demand for its currency. The bank slashed its key policy rate over 50 basis points to try bring the rate as close to zero as possible. Both the Swiss franc and the yen have been benefiting from quite strong safe haven demand as the US dollar has fallen out of favour over recent weeks. However, the strength of these currencies have undermined the economic growth in these countries. The highlight of New Zealand markets yesterday was the Q2 employment data. However, the data came out bang in line with market expectations and as a result didn't trigger any market reaction. Employment remained steady over the second quarter, which left the unemployment rate unchanged at 6.5%. As expected, we did see a sharp decline in Christchurch employment as a result of the quake. However, what was surprising was the strength throughout the employment in the rest of the country, which grew quite strongly and builds on strong growth over the first quarter as well. The strength in labour market recovery over the first half of the year highlights the underlying strength in the economy. As a result, the Reserve Bank of New Zealand will be further convinced to increase the official cash rate. They're seeing the increase in business confidence is now translating into real activity. However, the Reserve Bank of New Zealand did indicate that a deterioration in global risks may stop them from increasing the cash rate in September. Last night's developments with a sharp drop in equity markets and an increase in concerns may increase some uncertainty onto whether the Reserve Bank will actually go in September or not.